Good evening, friends. Today is Teachers' Day. And on this Teachers' Day, I offer my prayers with folded hands to Dr. Mohit Agarwal, who has been my teacher, my mentor, my guide, my Dronacharya in my trading journey. Guruji, I call him Guruji, and he deserves to be called a Guruji. Nothing shall be more rewarding to me than having an opportunity to serve you in your feet and wash your feet. That's my respect for you, Guruji. Continue the good work that you're doing and keep guiding us. With that, friends, let's go back to our daily analysis. Now, friends, what happened today? What I had mentioned yesterday, that if it crosses 17,623, we shall take a call with a target of 17,777, but the market disappointed us, completely disappointed us. But I had also said that if it is in this line, then wait for it to see whether it is breaking this line or whether it is coming down. So the market came down and it went into a box. In fact, the market was in a box from 925 till there. So all this period, I don't think there was a much opportunity for us to make profits. In fact, people who would have taken positions would have ended up in a loss. So friends, please try to understand one thing. When the market goes in a box, just come out of the market and stay aside. Now, friends, coming to tomorrow. Friends, what I want to show you on a daily chart is that the market is creating a volatility compression. What I call this as a volatility compression because there was a consolidation here. If you see from the 22nd of August, and then there was a big candle formed on 30th of August, and from there, all the candles are inside this big candle. So anytime it breaks 17,777, which is the high of this candle, and or 17,400, you can expect a long-term movement. So I'll be positionally long if it goes beyond 17,800, and I'll be positionally short if it closes below 17,400. Except for that, I shall be on an intraday basis. But with this volatility compression coming down and down, we can expect an up move very shortly between today, tomorrow, or maybe 1 or 2 days. Now, how do we trade tomorrow? Let's get back to a 5-minute chart. Now, in the 5-minute chart, if the market opens flat, or 30 points and is within the triangle and goes up, wait for it to cross 76.96. What is 76.96? Which is nothing but the start of the downward move, which happened on the 1st of September. Okay, from this point. Now, wait for it to cross 76.96, and once a 5-minute candle closes above that, then I shall take a 17,500 call with an SL of 17,660. What is 17,660? Nothing but this particular trend line. So it should keep this trend line as your SL. Now, if you've taken a call here and kept the SL here, the moment the market closes below this line, which is 17,660, please exit the trade. Do not go any further. However, if it doesn't hit your SL, then you can expect a target of 17,777, the first target, which is the high of this point, and the second target of 17,823, which is again here the high of this point. Okay. Now, if the market opens gap up below 76.96, then the above scenario shall apply again. If the market opens gap up but less than 100 points and then allow it to. So I repeat this scenario very slowly. If the market opens gap up but less than 100 points, allow it to come down. Allow it to come down and test this particular point. And once it tests this particular point and goes up, allow it to go up by 30-40 points at least. Allow it to go up by 30-40 points at least, and like this. So it opens gap up, it comes down. Allow it to go up and test 30-40 points. Allow it to show you that it is now moving up. 30-40 points is something which should be good for us to conclude that it is going up. Then I shall take a call of 17,500 call again with an SL of 7660 and the target of 150 points. With the target of 100 and 150 points. If the market opens substantially gap up, somewhere here, and is more than 100 points, then please apply the gap up rule. Now, friends, I am neither bearish nor bullish. So I will discuss both the scenarios. Today, I am neither bearish nor bullish for tomorrow. So When shall I take a put? When the market opens flat and starts coming down. Give the market 30 points to prove to you, to commit to you that I'm going down. 30 points from the close of this candle, which is 76.53, 30 points is 76.23. So allow, and which is basically, friend, this Chintu candle, this Chintu candle here. So if it breaks this Chintu candle, which is 76.25, so the market opens flat, breaks 76.25, I shall take a 17,600 put and wait for a long target of 17,400. So friends, what is 17,400? That's this point. Okay. So on the downward side, I'm taking a very long target, but on the upward side, I'll be cautious and taking a short target. Now, what happens if the market opens gap down, but less than 100 points? Somewhere here. Then also I should take a put with an SL of 30 points and a target of 17,400. If the market opens gap down of more than 100 points, then I shall apply the gap down rule. When shall I avoid the market? If it opens gap up, comes down and breaks this particular line and it closes one candle below, then I shall avoid. It may so happen that the market will become sideways, tick, 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 and so on and so forth. If the market opens substantially gap down, then there's nothing to trade. So friends, for the benefit of all of us, I have also put this on a PowerPoint slide. Have a look at it. And this is, all this thing is there. I have put it in my Telegram channel. Go through it. Please join my Telegram channel, the description of which is given in my description box. So with that, I end my video for today. Thank you so much. Sayonara. Cheers. Bye-bye. Friends, if you like my channel, please share, subscribe, and also like my channel.